You go. Okay. Welcome everybody. So I do have everybody muted. We'll have a little Q&A towards the very end, where I will allow some of the other questions to just come in. But basically, this isn't going to be heavy lifting. I'm going to hit on kind of the important points to this new law, right? We'll go through their slides. There's 17 slides. I'm not going to necessarily just read them all, but you guys can obviously read them just as well as I can. But this is a new law. This is passed. It's in effect starting January 1st, 2026. And basically, it's going to be administrated by the unemployment division. They're actually going to be administrating this, and we're going to be all participating, whether we like it or not. There's no exemptions unless somebody makes very, very little money, almost to the point where nobody's exempt. And even owner officers, the people that might never claim it, well, we got to pay it. So we'll kind of get into those things as well. Obviously, if you have any issues, if you can't hear me or anything, just type something into chat, and then we'll go from there. But we're going to dive right in. It's Friday. It's 3 o'clock. This is one thing we probably don't want to be doing today, but we got to do it. So here we go. So what we're going to try to focus in on today is just understanding the law, the timeline, obligations. What do we really need to do? And then what do we need to communicate to our employees? Because there is that piece too. So if we do have employees, it's important that we communicate the necessary requirements to them. Okay. So I touched on this in the beginning. So this is a state-run paid leave program starting January 1st. And it is the Minnesota Department of Economic Development, DEED, also known as unemployment. They are going to add this in. Your unemployment tax IDs are the ones that are going to be basically paying this type of thing. And the goal of it is to provide, obviously, wage relief, but this isn't like the family leave that's already in play. This is I'm going to be gone for probably greater than 7 days. So think short-term disability. I think that's the easiest way to think about this. It's not long-term by any means, but it's also not, I got to run to the doctor right now kind of deal. There's something that's going to cause some time away, but not going to be indefinite, and not going to be like a day or two, right? Where they could maybe use PTO or some of these. So it is a wage replacement system. We'll kind of get into that type of deal. So this is idea of the employee benefits covered, right? Probably the last one down here is going to be the most logical, I would think, or at least the most frequently used version when they apply. But any form of serious health condition would also qualify. There's also family leave things that get kind of complicated in there, but it's not necessarily you as employers, your burden to explain all of it. There is going to be a little bit of a burden as an employer to give references to our employees so they can find out the information of how this system works. Because the nice part is while it is state run and while we will pay into this program, every employer will, it's not us that has to administrate it. So they will work just like you would work if you're on unemployment. You'll work through those lines. Okay. Important dates. Here we go. And that's why we're doing these seminars now, because you'll notice that the first date is October 31st, 2024. The wage detail reporting begins. And it's basically beginning not to collect dollar bills, right? That doesn't actually start until we get into the January 1st, 2026. I call this the warm-up quarter. When I started reading this and figuring out how it worked, I realized what they were attempting to do. They were just basically saying, hey, we need to make sure everything is working right. So let's get all the payroll systems up to date. Let's make sure our ADPs, our paychecks, our Gustos, or whoever we're using has this ready to go. We want to see these wage detail reports come in. And then from there, we have other requirements, right, where we're going to display our posters. We're also going to give written notices. We'll talk a little bit about that. Okay. But again, no money yet. It's just a kind of a reporting trial run, fourth quarter, getting the payroll systems up to date. If you are using a payroll company, They will be communicating to you what is necessary to get their systems up to date. And again, it's unemployment. So most people already have an unemployment ID. And so we will, discuss that as well as we kind of get into this guy. Okay. Eligible. I don't know what I said before, kind of everybody, right? The employee must earn at least 5.3% of the state average annual wage, which is roughly $3,700 a year. So people that are under this are not going to be eligible for this program, but it is for literally everybody. Maybe you got a 16-year-old kid that's working a concession stand. Okay, right? That's kind of the people that are outside of this. But for all other people that are above that, there is no requirement on hours. If they work an hour, they get it, right? It is a metric of what they're getting paid, not an hourly thing, right? And we'll get into those rates so you understand how the monetization side of it works. It applies to everybody, small businesses, big businesses, nonprofits. The only people exempt from this would be truly your sole proprietor, mom and pop shop. They are exempt because they would not be under the unemployment. But if they had employees in any way, even as a Schedule C sole proprietorship, they would be those employees would be subject to it. Okay, so think everybody, owner officer, everybody, you, me, all of us. Okay, leave benefits, pretty much what you see on the screen, right? It is potentially, in my opinion, and I could be opinionated guy at times, this is a very progressive wage replacement. Most disability policies, like when you sell disability plans, there's what's called moral hazard, right? And that's basically they don't want the wage replacement of a disability policy to be such that people aren't willing to go back to work, right? This is really pretty juicy because they're willing to go up to 90% of what somebody might make, but there is obviously a weekly cap. So, you kind of have to hit the nail on the head to get that 90%. But we do have 12 weeks family leave, 12 weeks medical, combined cap 20 weeks per year. That's a lot. Okay. So whether you like it or not, this is the law. And so we've got quite a bit of time that people can utilize for the benefits to the employees. Okay. So now let's talk about what we're all here for, right? What do we got to do, right? As an employer, what do we have to work on? Well, the nice part is the majority of this is really done by the payroll companies, right? The quarterly wage reports, it's going to be done by payroll. Deducting and remitting the premiums, well, it's done by payroll. Well, we do have to do written notices. Some payroll companies, if you're with like Paychex Corporation and you're part of their HR program, which is a monthly fee with them, they will provide you notices. But again, there's going to be notices. They're not out yet. I've been looking at the website where you can get notices over like the Department of Labor. They do not have the poster notices out yet. You can write them yourself. It's not that big of a deal. I do have a couple of templates. If somebody wants, I can send that I used to. I wrote mine myself just to get it done, just to kind of learn the process. Maintaining employee records, well, we do that anyways. But again, a lot of times this is done electronically inside our payroll systems, hire dates, fire dates, so on and so forth. This is really the biggest piece, right? It's the retaliation and reinstating our employees. This is keep us out of jail, or not necessarily jail, but out of the courtroom, right? Is that if somebody does take this, their job is theoretically protected, right? They can come back at an equal level and equal pay. We're not allowed to retaliate against somebody that goes on maternity leave. And so that's really our biggest responsibility, is just to have that freedom that's in play for that. Okay, let's get into the money. Here it is. The premium for 2026. Now, this can change. This can change, and it does not matter at all based upon the size of the companies or how the things are going to go. They basically just kind of, the actuaries came in and said, all right, to get this thing off and running on the ground, we're going to do 0.88% of wages. And that 0.88% of wages, how is it paid? In the beginning, it's split 50-50 between employer and employee. So the employee is going to now see a new line item on their paycheck. They're going to go, what is this tax? But it's coming out. And it's going to be a deduction, like a tax deduction. And they will basically be subject to the 0.44%. That means the employer is subject to the other 0.44%. So it's not heavy. It is there, it is something, but it's not, too egregious. This is not an experience rating. This isn't like, I had like 3 employees that went on maternity leave. Am I going to pay more next year? No, this is truly a socialized program. We all pay the same rate. Claims are not claims. Okay. Right. Now, benefit. And this is going to be probably for most of everybody here in this presentation. Employers with less than 30 employees, and this got cut off, but they pay less than, if I remember right, it's about $105,000 on average based upon the full-term equivalents of our employees, right? So if I have 30 or less employees and the compensation on average to my employees is under 105,000, you'll be considered what's called a small employer. I believe most people are going to fit in this realm in any smalls. And what that means is that there's a 25 basis point reduction. So this 0.88 goes down to 0.63. But here's the benefit, folks. The employee still pays 0.44. They do not share in the small employer relief. The employer is the only part that gets that benefit. So I'll be really interested to see how this is policed, how this is done, because obviously you start paying into this program first quarter, and then what is there, an annual reconciliation for people that are under 30, and then there's some level of credit. I don't know quite yet how that's going to work, but I have to believe there's going to be some sort of reconciliation to prove that somebody is considered a small employer. Can they go from small to big, back to small? I don't know. I don't think so. I think this will be treated on an annual basis. I've been trying to find an answer on that, but I truly believe most of us are going to feel that 25 basis point reduction. And then, of course, we need to show this deduction on a pay stub when it's coming off an employer wage, just like anything that comes off of an employee's wage statement. It does need to show up on that pay stub. And the payroll companies, again, are going to do this for you. This is something that you're paying them to do, and they should be able to handle that for you. Okay. We did touch on this a little bit. Again, wage reporting starts October. And they're getting this updated so the payroll systems have time, but we don't actually start collecting money till January. They're going to pay it in for first quarter in April. It's always roughly the month after the end of the quarter. And then maintaining payroll and benefit contribution records. That's going to be done all inside our payroll system. So the good news is this whole reporting piece, unless you're doing payroll yourself by hand, which I don't think most people do, this is all going to be taken care of for you from the payroll side of things. Okay. You are allowed to have a private plan exemption. I'm not going to go into it because I think that the cost of administrating this and doing it yourself probably outweighs the actual cost as a small, especially if we get the 25 basis point reduction. So I'm not going to even get into it, but it is there if somebody is like, hey, I already provide a better benefit, from my folks. You can get that plan approved and be exempted from having to do this type of thing. Okay. So yeah, this gets kind of interesting. There is a level of interplay and a little bit of overlap with some of the other types of things that are in play. The one that is kind of most important to me when I was reading through it was, you can't require the employees. Like I could see employers going, hey, you're going to use your PTO before you can go claim this. But you can allow the concurrent use of it, which is kind of counterintuitive to the point of not allowing it. But that is the way that the law was written, from that side of things. But you might want to maybe update some of the policies if you do have some PTO policies related to this. maybe updating your employer handbook or your policies to kind of reference, this new program. I don't think it's going anywhere. I don't think it's getting repealed, not in Minnesota. This is kind of there isn't many states that are doing anything like this. And so I don't feel this is going anywhere. So you might as well update your handbooks accordingly for that piece. Okay, now let's talk about posters and requirements. Basically, anytime you have a new hire, within 30 days of hiring, you've got to give them this kind of letter. My suggestion is when you give a new employee a W-4, a direct deposit form, maybe have them fill out an I-9, which you should be doing, have this as part of your packet. Just have this letter that talks about it and go, here's your hiring package. And then bang, you've already accomplished this at any time, right? All of our current employees, this is our responsibility. Again, if you have HR functionality, they may handle this for you, but our responsibility is by December 1st, right? We got plenty of time that we do provide them a written kind of notice that gives us their ability to understand this. And then if we do have an office, a workplace, a break room, something like that, we're supposed to have that poster, just like many of the other posters that exist, should be placed by November 1st. So this is kind of our first requirement. Obviously, our second requirement, 30 days of new hires. And then obviously, if we've got, English as a second language, make sure that you have a poster that's equal to the people that are the most common language spoken in your business. That's how it was worded to me, is if 95% are English speaking, you'll be fine using English speaking. But you can always be kind and do other languages as well, especially if we're in the restaurant business or something like that. Okay. Anti-retaliation, a little bit more on that. I'm not going to sit and talk too much about that. I think that's pretty self-explanatory. And so now we kind of talk about what do we got to do next, right? We talked about the timeline. We talked about the things that are related to giving notices, posting posters. Okay, so now what, right? The payroll company, again, is going to handle much of this type of thing. Really, the number one thing that I think everybody should do is that there are plenty of companies that do not have an unemployment tax ID number. Okay. So an unemployment tax ID number through Minnesota Deed is not required if I have, let's say I've got an S corporation with one owner, two owner, it's maybe a husband and wife, and they don't have any other employees. Okay. Well, there was no reason for them, even though they're on salary, they're on payroll, to go get that unemployment tax ID number because they were exempt from unemployment. You didn't actually have to get it. You just told your payroll company, I'm exempt. And that is exactly what it is. But now we're not exempt for this. Now we have to get this UI number, even though it's not for unemployment, right? So this is a little bit of theory crafting. This is not in the presentation, but let me just kind of explain the tie-in of federal unemployment to Minnesota unemployment, okay? First and foremost, if you're in the construction business, disregard what I'm about to say, okay? Because construction businesses pay a very high unemployment rate because they have very high unemployment typically during the winter months, okay? But if we're not, and we haven't been paying into the unemployment system, most likely you're going to want to start paying into the unemployment system because number one, the amount that Minnesota's collecting for state unemployment is pretty small. And if we pay into the state unemployment system, for every person that we pay in, we get a credit against our federal unemployment equal to approximately $378 for those individuals that we pay federal unemployment. So that was a little confusing. Let me see if I can break it down a little bit better. When we don't pay state unemployment, a person that is paid a W-2 wage, typically an owner officer, okay, is going to pay $420 into the federal unemployment program on a calendar year basis. Okay. So think of it going, I'm paying $420 unemployment. I'm an owner officer. I'm not paying state. Okay. If I pay state unemployment on that money, the max that I'm going to pay to the feds is $42, not $420, but $42. That's a $378 discount. Okay. Minnesota currently is charging a rate on about $40,000 of taxable wages and unemployment, but currently that rate tends to be under 1% for people that are not in the construction business. Well, 1% of 40,000 is $400, right? So you can see that as a better part of valor, now that I've got to get this unemployment number anyways for paid leave, my suggestion is to start paying into the state unemployment program, get the federal credit. Again, the payroll companies do this for you. It's up to you to tell the payroll company that you want to pay in on it. But if you have an experience rating under 1%, it's kind of a no-brainer at this point because you're going to need this ID number anyways for this other program that's there. Okay. You don't have to do what I just said, but the math kind of starts to make sense when our unemployment to the state is 1% or less. Again, 1% or less, it starts to make sense to pay into the program, reduce what you get. And here's the benefit, folks. If you pay into state unemployment and you're an owner officer, you actually can claim it. That you are eligible to do it. If you don't pay into it, you never can. But yeah, you're still paying into the federal program. Okay. So if you don't want to go through that, you still have to get this unemployment ID number. This is through the Minnesota unemployment programs, right on their website. You go through this. When you do enroll for this, they ask you two questions in the enrollment period. And it says, are you enrolling this for UI? How many employees are going to be subject to unemployment? And then right below it, it says, how many are subject to the paid leave? Well, everybody's subject to paid leave. So it's kind of like everybody, right? But of the ones that are subject to paid leave, how many are subject to unemployment? My suggestion is, again, if your experience rating is low, which most of it is, we select the same number. If it's 3 on the top, it's 3 on the bottom. And then you're off and running. You give this information to your payroll company. You might have to create what's called an agent record inside that account where you actually say, hey, Paychex or ADP or whoever is doing your payroll is going to need access to this account to be able to submit this report. If we as a firm are helping you or we are kind of, I guess, third partying your payroll and you're doing your payroll through us, Jamie will be helping with this process. If you're outside of our umbrella on payroll, you are kind of on your own, but work with your payroll companies, your Gustos, your ADPs, your Paychex to make sure that you have it all set up and in the system. Again, it's really just getting a UI number. We call it a UI number. Maybe you call it a paid leave number. I don't know. It's the same number that it qualifies for both of the UI and the other piece. I think that's going to be probably your most challenging piece to go through with this. Other than that, the communications to the employees, putting up a poster, that's going to be pretty darn easy for that. There might be some questions on this piece. I will open this thing up here. Let me get into that. And let me see. I think I can allow people to do this. I will stop the sharing here. And you can now unmute themselves. All right, everybody has the ability to unmute themselves at this point, for firing away questions, feel free. Lydia, you asked a question, how does this relate to 1099 employees? It doesn't. But be careful that 1099 employees aren't reclassified as a W-2, right? Remember, a 1099 contractor is like my relationship to you, Lydia. I'm truly a 1099 relationship. My success and my financial dependence, it does not rely upon one individual to pay me at 8 a.m, take a 30-minute break for lunch and go home at 4:30, right? That's an employee relationship. So if it smells employee and you've been doing 1099s, it's kind of scary now because now we got a new thing, right? Not only could they go cause a storm with unemployment saying, well, I thought I was an employee, right? Like I've literally seen this. Now they're pregnant and they go on maternity leave and they find out I'm not an employee. I was really a 1099, right? And I don't know how that's going to shake up, but I just don't like the sound of it. So make sure that your employees are truly employees and you're not just giving them 1099s because you want to, right? So hopefully that helps. Good. Good, good, good. Other questions? I'm going to just kind of take a peek in the chat room. If people feel comfortable in chat, that's fine too. Any other questions? I couldn't have been that good. I like it though. Oh, see, Aaron? Stellar. That's what I like. Okay. Well, again, unemployment number. If you have an unemployment number already and your employees are already there, congratulations. Like you really don't even have to do anything besides the posters and notification because your payroll companies already have it. You're already kind of grandfathered in. You'll see this too if you go over to the unemployment websites. They'll even kind of tell you the three options, right? What are you registering for? You already have this? You don't actually need it. You're kind of grandfathered in because you already are paying the unemployment. The question is just whether or not you want the owner officer to be included in the unemployment metrics if you already have that unemployment ID. The trickiness will be for the people that don't have unemployment IDs because they're exempt from it and they just have never registered for it. That's where the little bit of the challenge comes into play for that. Okay. I will hang out just drink on my coffee here for the next 5-10 minutes. If someone's got questions, fire away. Otherwise, thanks everybody. I will be posting this up on the YouTube channel so you can kind of see this again if you'd like. Otherwise, have a wonderful weekend, and looks like it's raining again, so stay dry everybody. Thank you.